This is the weekly review for the week of May 2nd to May 6th. So starting off with Euro, in my last Sunday preparation video, I was going into the week being bullish on Euro because we formed this swing low here on Thursday, a daily swing low. So we created a new daily range, and I was anticipating price to retrace into premium of that daily range because we've been selling off pretty heavily for like 6 days in a row. So I was thinking that because of that daily swing low that was formed, we were going to be given some sort of retracement. And Monday, I came in looking for longs. We had initially in London a bit of bearish price action with this raid of Asia high with an SMT. But the thing is, we did not get a significant break in market structure. The M5 swing low prior to the raid is all the way down here. And we got this displacement down, but then there was this kind of consolidation here. And even though we had displacement here, this was a raid of these equal lows. So last week I was eyeing these equal lows here to be rated to give a long setup this week. And that's exactly what we got here. In fact, we created even more equal lows with this London low. So this was a really, really nice clean setup in terms of we rated a significant liquidity pool being equal lows as well as the London session low here. We formed a SMT with GU and also dipped into this H1 fair value gap here. Had very, very nice displacement off of it, and this is absolutely clean. Break in market structure, breaker, fair value gap, order block. Dip right into it, and boom, we take off. We have the low-hanging fruit here, which also created a confluence of equal highs. So this was really, really nice. I entered in on this trade here at the standard 25% of the fair value gap, and I took 50% off here. And I was planning on taking another 50% off right here in this M15 fair value gap. But I did not pull the trigger because I was just waiting for it to touch the top of the fair value gap, and we never did that. We went, or we came, I should say, like less than a pip short of it, so I never actually pulled the trigger on closing the other 50%. And looking back, I could see that was a bit of a mistake because anywhere between these equal highs here and this fair value gap here, I should have taken some profits, or additional profits, I should say. I was really eyeing this London high just because, again, I came into the week bullish, but I think this would have been a stretch in terms of the liquidity. I mean, if we came all the way up here, this would have been what, almost a 7R trade. That's a little bit crazy, especially being a new trader. ICT is always saying focus on the low-hanging fruit liquidity, the liquidity that's nearest to price, and that would have been this here and then these equal highs here. So looking back, I definitely should have taken another partial here. And what ended up happening was I moved my stop loss to break even, and I was watching how price reacted to this 830 price level here. So obviously we had the Judas swing below the 830 price, and I didn't think that it was necessary for price to come back below the 830 price here, which is why I was just monitoring it. And when we had this move down, I closed the rest of my position because if we were to be bullish, I was thinking that price shouldn't need to come back below 830 opening price. And we ended up coming down. Obviously, I would have been stopped out if I held it. and we kept the raid low until the afternoon, where we completely fell off. So this was a very, very nice trade. The only improvements, as I said, would be to take another partial here and really just focus on taking profits at the nearest liquidity levels and not trying to reach for, a crazy, 5, 6, 7 hour trade, 10 hour trade to hold it all the way up here. So that's really what I'm focused on now in general, because when you get in a winning trade like this, and I was definitely feeling like in terms of my emotions on this trade, you see this shit going up, and you're like, oh man, this thing's going up to London high. I'm gonna just hold it, and that's one of the big psychological factors that I have to deal with and I have to work on, is make sure I take my profits at these low-hanging fruit liquidity levels. So now moving on to Tuesday. Tuesday I got burned, not on EU, but on GU. So I was still bullish. We had the mentorship set up here. The reason I didn't take this is just because price was consolidating here, and we had a very small fair value gap and no really clear breaker. So even though we had the raid of a session low here, London low raid with SMT with displacement, the nesting of the order block, fair value gap, and breaker was not very clean here, and we're just consolidating for this whole time, so that just didn't make me comfortable to take this long. It did end up working out in the end, where we came up and took London high. So London low raid, RTO, it would make sense to go target London high. And eventually we just kept moving up. And I felt that the draw on liquidity was these equal lows here for DXY. And that's why I was looking at a continuation setup here at this M15 fair value gap. Right here is the 830 price. So I thought, because we had this huge run up in early New York, we were going to just have that Judas swing below 830 price into this M15 fair value gap and continue going higher until DXY took out these equal lows. But we ended up having a whole retracement, pretty much, not of the entire move, but basically we rated Monday high. So this is Monday high with a GU SMT, broke market structure here on the M5, and we went back up to these low time frame PD arrays. The reason, again, I wasn't looking to sell this is because I had that bullish bias on the week. And the same thing happened with GU here. GU was honestly a little bit sloppy because we had a nice bearish setup here with a raid. Now this wasn't a significant high. This is just before London. But we had a raid of this high, SMT, into a H1 fair value gap and H4 order block. We got the RTO, but this was in between London and New York. And then this here ended up being an H1 break in market structure. So this shit looked bearish live. But even though we broke market structure here, so this candle closed as a H1 break in market structure, we ended up just reversing here and shooting back up. So this ended up being a raid with a DXY SMT. So even though this London price action was very bearish, we reversed that, broke market structure here, and this is where I decided to get in long at this M15 fair value gap and at this M15 breaker, because I thought we were going to have a continuation to Monday high here. But this was the SMT with EU, where EU rated Monday high, GU did not. And yes, even though we came and rated London high into a H4 order block and fell off, again, I had that bullish bias for the week, so I was just ignoring this displacement off of the H4 order block, right? Because I thought we were going to end up violating this H4 order block on a retracement here. And the same idea was a retracement below the 830 price into this M15 Fair Value Gap breaker. But we ended up just breaking, just like EU M5 market structure, and we returned to this bearish M15 Fair Value Gap before rolling lower. I think the reason for this is because it was NFP week as well as FOMC. So ICT posted on his community tab that we're going to have a seek and destroy profile for the week. So I think that may be why this long didn't end up playing out, because we still had those equal lows on DXY, and this was on Tuesday. You see here this move and then the retracement here. Obviously these lows were the target for FOMC, so maybe that's what ended up happening here, was that they were saving these lows to be taken for or on FOMC, which is why we had this retracement, basically consolidation until FOMC to take out the equal lows on DXY. On FOMC, there were no actual trades. It was just a consolidation up until the FOMC, but we engineered this trend line liquidity here, which they ended up taking it. Initially, though, we ended up going higher, so we took buy side above here, then we nuked the trend line, and then we went up. And we went up to take these equal highs on Euro, these equal highs up here. This one. So live, I was anticipating this to happen, right? I saw the equal highs up there, DXY equal lows, and then this trend line. But obviously the thing is, there was no setup that formed here. I didn't know what they were going to take first. And they ended up taking short-term buy side first before taking sell side and then moving it up. But we shouldn't be trading this anyway, as ICT says. Now, moving on to Thursday. Thursday we had a clean setup on GU. Similar on EU, but my bias flipped, at least in the short term on Thursday, because we had very bearish market structure setting up. We had a GU SMT with a raid here, breaking market structure on H4 or on H1, and we went up into this H4 fair value gap and H4 order block here, displacement off of it, and then low time frame raid, break in market structure, return to origin here. Now this was not super clean. What was clean was the GU setup, which was here. So we had that EU DXY SMT, H1 break in market structure here, inside a H4 fair value gap, another H4 fair value gap here. But the setup on GU, that was clean, and this was high impact news on GU here. We rated equal highs and London high with a SMT, displacement, classic mentorship setup, but they used the news to take the rate high before going down to London low, right? So this was just another classic setup, right? We raid London high, form the mentorship setup. We should target London low liquidity, especially now because we have equal highs on DXY. DXY took equal lows, so the next draw on liquidity should be these equal highs. So that's why it makes sense to go short on foreign currency, but just with the news factor, they come up here and stab right into the 12 a.m. opening price, like less than a pip. So they take it into premium slightly, violating this rate high and then nuking it lower. EU did not have as clean of a setup in early London, but what we did get was an institutional order flow entry drill on the M15. Again, the DXY target is still those equal highs, so it makes sense to come in here and short this M15 Fair Value Gap. And we also had a second opportunity to get in here at above the 830 price. That's the 830 price. We have this Judas here, and it's not the cleanest setup because this is the Fair Value Gap all the way here, and price really violates it, but still respects it a little bit with the closures of the bodies. But they took price again into the short-term discount or short-term premium of the New York range, this 830 opening price, before sending it lower. I did not take this live because I was just really annoyed that I got stopped out on this super clean trade. So I just took the rest of the day off the charts. But this was a very clean setup for EU, targeting the FOMC low. And then on Friday, we had NFP. So initially I thought, because we created more equal lows right here, here, and here. So I thought the FOM or NFP was going to raid those equal lows, but we ended up raiding them in London. And we created a clean mentorship setup here in London, but I was not up to take it because I just trade New York. And this was just beautiful. There was no SMT here though, but the displacement, the confluence of all the PD arrays, and then you're targeting these just criminally clean equal highs here. So this was a beautiful setup, but I was not up to take it. And then New York and NFP really just consolidated. So looking forward of what I expect this week, and actually just looking at the weekly time frame for this previous week, we went from daily liquidity above this swing high to daily liquidity below this swing low. So this really, it was a seek and destroy week. There was no clear direction to it. You know, the opening price is around here, May 1st, right there. So we pretty much had a indecisive week. We opened, or we closed where we opened. So yeah, that's one of the things that I noted in my journal, was that NFP and FOMC weeks are going to be seek and destroy profile, and we're not going to have any range expansion. So that's why I assume we didn't come up into this premium of the daily range. So going into next week, I am still bullish on both foreign currency and NASDAQ and S&P, because I think there's just a lot of unfinished business in terms of buy side here. We're eventually going to go lower, but I think we still need some type of retracement into premium before we go lower. And we had this GU and DXY SMT here with previous week's low. So this is the low that formed the daily range low, or the daily range kind of basing my trade on, or basing my weekly open, high, low, and close off of. And we didn't take that. GU and DXY took it, but EU still has it here. Really, my bias is bullish, but I'm just gonna wait to see what price does on Monday, because there's no clear PD array that I think price is gonna retrace to and then go up. So even though I'm gonna be leaning with a bullish bias this week, I'm just gonna wait and see what price ends up doing on the opening. And really the same thing with NASDAQ and S&P. I didn't take any trades on these this week, but especially with NASDAQ, we have 3 sets of equal highs that should be taken. To be honest with you, I just can't see us nuking lower without coming back up and taking these weekly equal highs. I mean, I guess anything's possible, but that's going to be really fucking annoying if that happens. But really the bias is just because we have at least these 2 sets of equal highs near price. And I think that we're going to eventually take those. I don't know if we're going to come down and take this weekly liquidity right here and then come back up and take these highs. But really my bullish bias just comes from the fact that we have these equal highs and also weekly and daily fair value gaps above price that should be retraced into before going lower. It's not necessarily that I see anything bullish here. There's no raid. We just had a weekly break in market structure. So even though I'm leaning bullish, I'm just, again, going to wait to see what happens on Monday, what price does. The same thing with S&P. We have weekly liquidity here, monthly, weekly fair value gap, as well as the comparable sets of equal highs up here. So bullish on S&P. But yeah, we're going to see what happens going into this week.